All right, I had a comment recently about some VWAP kind of follow-up trades on how you can do it. I want to go over it pretty quickly. It's not going to be too much in depth because I don't want to give away everything um, that I do, but I do want to give you guys, kind of my framework and how I use it. So first things first, you kind of have to rank and filter out what's actually useful to you, right? Because you have the yearly VWAP, then you have the monthly, you have the quarterly, and you have the weekly, and you also have the daily. So always in my mind, I'm thinking, where are we here in relation to other VWAPs and stuff like that, right? A bunch of the time, they're not going to be lined up super nicely. So one VWAP isn't going to be confluent with the other one. One's going to be bearish, one's going to be bullish. So I'm not only using VWAPs for my trades, and I kind of want to go over some other stuff that I do use. So, number one, I use these kind of supply and demand principles. Some people call them like fair value gaps or something. Some people call them like order blocks, whatever you want to call them. It's one of the actual TA stuff that's like scientifically proven to work. So that has that going for it. It's basically just like when you get an impulse candle, kind of for example here, right? You get this impulse candle, and it's basically this being defended, right? So this would be your short here. That's all it is. There's a bunch of videos out there going over them, so I'm not going to go over them here, but basically those supply and demand, whatever you want to call them, right? Then we have the order book. So I'll make sure I'm confluent with the order book depth. So I use 10% and 5% order book depth. And I also like the volume by side aggregation. That'll show you which side's getting aggressive, especially into a level I'm looking to fade, right? I mean, even here you can see like this was the daily open. We had a high, some delta aggression, and we had it right into this, it's one of my levels, this kind of range here. Yeah, right into that level. So, just some context there. So that's what I'm looking for. I'm looking for high volume nodes or low volume nodes in the volume profile. So I'm looking for where we are confluent with VWAP, and high volume nodes, low volume nodes. I'm also looking for levels in the TPO. So I'm looking for composites. I'm looking for single prints. And then that kind of gives you all of the stuff that you need, right? So I'm never just entering off because price is coming back into a VWAP standard deviation band or because it's come back into a VWAP. Never. There's not enough confluence. There's no edge in that, really. Um, will I use it for, trend trading? We had the FOMC today. I was able to get in here after this dip because we kind of started to grind. Oh, that's the wrong tool. Because we kind of started to grind here. Yeah. But, there's context behind that. There's, we're at the range high. I think we're going to break out. We had a good FOMC. He's saying good things. The S&P is looking bullish. So I'm never, ever taking a trade just off the VWAPs. I'm using all these things in conjunction or in confluence with each other um, to make my decision. So, the first thing I'll do for the day, I'll look over the high time frame VWAPs. Where are we, right? So obviously, we're kind of in a downtrend. We're kind of holding outside of this one standard deviation band. So I'm medium time frame bearish, right? The major trend is up, you know, for sure. I mean, you can't deny that. The major trend is up. So you're not super, macro time frame bearish, but you are immediately bearish, we'll say. And then on the weekly, right? On the monthly. Quarterly doesn't matter right now because we haven't wait, it might matter. No. Quarter hasn't flipped yet, so all right. So now we have the monthly here. So what is the monthly giving us, right? There's actually the monthly's in a great spot because I always talk about having it like in a Gaussian curve. You guys can see it lines up pretty nicely with the volume profile. So you can actually start using these bands as support and resistance, which I did. This kind of move down here. I talked about, check out my last video, but this trade, right? It held down here and you had the order book depth kind of confirming it. You also had the volume profile fall off, right? So look at this. The volume profile falls off down here, right? So you're not looking for it to spend a lot of time. If it starts spending a lot of time down here, we're going to start going lower. So that's another tool I'll use. The context in this one, the VWAP is sloped flat, so I know it's going to be good for the edges of value, right? If the VWAP's like super ramped up like this, I mean these bands are just useless because it's not forming any sort of value that you can trade around, right? Again, we're talking about trading around this Gaussian curve that looks like this. If the VWAP's just slammed up like this, I mean, it's not building any value. It's in an extreme trend, right? You throw that garbage out the window. So here I was. You guys can see how I flip bullish once we started holding kind of this bottom standard deviation band. Also confluent right with the order book and all these other things I'm talking about. But this is kind of how I would use it. Knowing in the back of my mind that, yeah, we're still in kind of a mini downtrend, but locally we're in a little bit uptrend. I think we're holding well. So that's that part. And then like your target would be over here, but 90K around there, probably going to be the resistance. This is just an imaginary line at the end of the day, guys. It's not some magic thing where it always bounces off it. It's just the truth. So we have that. Now let's remove that. Let's go down to the weekly. Let's interpret the weekly. So the weekly time frame, you guys can see I was really using this here. So we had the previous week VWAP and we reclaimed it. I think that was important. I'll still use these levels even if they kind of don't hold exactly, right? Like I was looking for longs down here. It's kind of the range low of this range we had, and we had the weekly VWAP, and we had the order book confluence. So I'm just looking, right? The ebb and flow of the market, right? We have, volume weighted average price. Okay, here's the average price. Here's where it starts to get discounted. It's going to be down here, right? Down near our low of our standard deviation. And that's where you want to get involved. You don't want to get involved where it's not discounted. It doesn't make sense. So, the weekly, yeah, that's how I was thinking about it here, right? We're getting down near the range low. It's discounted. We have the order book confluence. We had the volume was going crazy. You guys can see these large volume spikes down here, and it wasn't breaking lower. So all that kind of brings it into it. So then we had the stab lower. And what do we do? This is like current, so it can help you guys. We trade back inside of this value. We retrace it to the other side, and then we start holding outside of the 1 standard deviation band, and then you can see we start trending upwards. If we would have done something like this, where we hold outside of it, and then we kind of come back in and retest the highs and then nuke, wouldn't be as bullish. What we did here is pretty good. You want to see kind of the 1 standard. It's not perfect, right? Just areas, not lines, but we're just holding outside of it, which is what we want if we're going to start trending upwards. So that looks good. On the daily, you guys can see this was the daily VWAP retest during FOMC, right? So in a kind of a trending market, we'll kind of hold the 1 standard deviation all the way up, and that's kind of what we saw. And then you get these nukes, right? Right into VWAP, and this is, if you're on a trending day, this is where you want to get involved on these VWAP touches. If you didn't get involved here, you could have always got involved here where I was talking about, or if you're even super late, you can get involved here, and kind of ride the band. So they give you really great entries when we're trending. And then they also give you good mean reversion trades when we're not, like here, right? We blast into the level. You have this kind of OI, just absolute wipeout. You have the CVD go crazy with longs. So, you get both sides of the stick with these VWAP bands. So if you guys have any more questions, let me know. I'm going to recap again. So I use the kind of order block, fair value gap, meme lines. I use the order book depth. I use open interest. I use CVD. I use liquidations. I also, something else I use, I forgot to mention this. I also use this Velo template with funding rate, the liquidation, the aggregated trade count, and then I have these two CVDs, spot and perp. Something very important, you have to find your high time frame versus low time frame context. So you got to look for your yearly, quarterly, monthly, weekly, and kind of rank and distill what ones you think are important. And then I also look for the volume profile. I'm looking for high volume nodes and low volume nodes. And then I also use the TPO. I didn't add this on there. Let me add that to my notebook. I didn't add the TPO. So we have the TPO levels, we have composites, then we have single prints. And I think that's it. If you guys have any questions, let me know. It's a real high level overview. I didn't go through anything in depth really. So if you have any questions, let me know.